Now let's turn to our third and final subject, and this is back on the controversial side. I'm talking about property and casualty insurance, and specifically private passenger automobile insurance, and even more specifically, how the pricing, the rates, the premiums are determined for private passenger automobile insurance. What do I mean by that? Well, for years, for decades actually in my case, because I've been doing this so long, there have been challenges to various rating factors that insurance companies have used. And if anything, auto insurance rating factors, because I suppose of big data and other reasons, has gotten more sophisticated. One of the most controversial factors that has been, if not universally adopted, then close to it, is the use of credit. A lot of people refer to it as credit scoring, and they object to the use of credit in automobile insurance rating because they believe it's unfairly discriminatory. That, if anything, that view has grown in recent years. In Annapolis, consumer advocates believe, frankly, that it is racially discriminatory. I should say that in 2001, I thought we had put this issue to bed. I was wrong. We had a bill that year that would have banned the use of credit. It was a session-long slugfest between the industry and the advocates for the bill. It resulted in what I think, Commissioner, is fair to describe as one of the stricter, certainly one of the more thoughtful and stricter approaches to the use of credit information in automobile insurance rate making. And I believe that if we have to remind legislators about what they did in 2001 and what some other states permit before we throw this out. I believe that the rating factors that are in use that your agency is charged with examining and determining are fair. The more there are, the more competition there is, the better for insurance consumers. We do know that, in particular, racial disparities in automobile insurance rating factors, credit being one of them, that's important. There are challenges to other rating factors that have been recently adopted. So, Commissioner, we'd like to have your views on that. We'd like to know what your view of what the NAIC has done and is doing, where you think this is going, perhaps where you think it should go.
At that point in time, that was a big part of my, first couple of years as the principal counsel was working through all of those issues around credit scoring and the implementation of that bill. And so, now, fast forward to 2020 and I walk in and sort of this is one of the major issues. And, it's a difficult issue, I would have to say. And by that, I mean, it's going to come head on at the NAIC this year. And obviously it's going to come back in Annapolis this year. Because the question of the use of credit in developing, to your point, insurance scores, and it's part of a tiering and a rating exercise, is really part of two broader conversations. The first really is the general conversation around the expansion of rating factors based on correlations. So, that's kind of the offshoot of a lot more data and a lot more computing power. And so there is a serious conversation that's been brewing and evolving, at the NAIC over the last number of years that's led to the creation of committees on big data and to the Innovation and Technology Committee. And, part of that conversation is around whether, any and every correlating characteristic ought to be fair game as a rating factor. The second kind of big contextual issue is disparate impact. So even when you have factors that are highly correlative risk, okay, very accurate predictors of risk, and there's no question that credit is highly correlative and highly predictive. It just is. are there social justice considerations that should nonetheless bar the use of those legitimate factors? But, you know, even when you have a circumstance where there's no intent for this factor to be a proxy, it is statistically validated as predictive of risk, and therefore under any rubric of the way in which insurance laws work, it is proper. With respect to the Maryland discussion, you know, the MIA has traditionally not taken a position. If we look specifically at credit, the MIA has traditionally not taken a position on credit as a rating factor. And the MIA has, you know, otherwise really been, I guess, more of a resource to the legislature in helping it to understand contextually for Maryland, how does credit fit in? So what is the impact of credit scoring? And, you know, I know that Robert has, you know, testified in the past that if you look at it overall, I think he surveyed something like 15 insurer groups. And if you look at the average percentage of policyholders within any one group, they receive really a premium discount on credit. You know, that's about 75% of the group. So, you know, a far larger number of policyholders, you know, in Maryland benefit from the use of, you know, credit scoring than those that do not benefit from it. At this moment in time, I don't really see, you know, a deviation in the way that Maryland has traditionally approached this. For all of us, it is a, where is this train going? And how are we going to, you know, address it in real time? So I know that that's not a lot of specificity. You know, I can tell you that, you know, I come to it with views that are very similar than Al's, but I think we have to watch where the train is going, what's practical and what's real, and, you know, react as, you know, ideas kind of and proposals, you know, come out there. And this is another area where, you know, Bryson, you are going to be sitting like in my conference room if we ever get to the point where we can sit in conference rooms again. But this is another area where I'm going to want to hear a lot from, you know, people really on all sides of this. But I think it's going to come hot and heavy. There's going to be a lot of it. And while I don't see anything now that if this bill came back up in Annapolis next year that the MIA would take any different position, I think that we're going to really have to see what is the General Assembly going to want and what kind of data are we going to be able to provide. And I think what's happening on the national level, you know, may have more influence in the General Assembly this year.
Well, Commissioner, this industry in which you and I both have spent our professional lives, I think we can agree, cuts across the entire socioeconomic spectrum. It touches every citizen in this state. I can only admire you for taking on this job. While I'm wondering why you want to do it, but that's another conversation we can have another time. Well, Commissioner, I have so many questions to ask you, but I can't think of a better place to end our conversation than with that. I thank you for those remarks. On behalf of our clients who are with us today, I'm certain that I'm expressing their gratitude as well as your time and generosity for being with us for this introductory conversation. And I personally look forward to having additional conversations with you and pledge that we will do our best to give you good information that you can act upon. Let me just say that I second your endorsement of your staff. You've got a good one. I'm glad that you plan to continue to rely on them. And you can rely on us as well. So Commissioner Kathleen Birrane, again, welcome to your office. And we look forward to working with you in this position. So thank you so much.
Thank you. I appreciate it. Y'all take care and stay safe. Wear your masks.
Okay.